Hello, Jason Bates here, owner of Electrum Financial, located right here in beautiful Scottsdale, Arizona, where a mortgage is not a flip of the coin. If you like the lowest rate at the lowest cost, then allow me to put my 30 years of experience to work for you. You've got nothing to lose. Here is this week's mortgage market at a glance. Home prices have been on a tear since late 2020, despite generally higher rates in 2021. In the past few months, rates have upped the ante by surging at one of the fastest paces in history. But in the data just released this week, home prices are moving higher at an even faster pace. First, let's take a look at rates. I already examined the phenomenon in detail in last week's video, so check that out if you missed it. And there were no major changes this week. Actually, the absence of major changes is one of the most promising developments in weeks. As oil prices and inflation expectations have leveled off, rates have attempted to find some sort of ceiling. Whether it's temporary or longer lasting remains to be seen. The following chart shows the leveling off process in terms of 10-year Treasury yields, which give us a more detailed short-term view of rate trends. Mortgage rates only get one data point per day, so it's much harder to see that they've leveled off a bit this week. But still, very easy to see how much they've risen in 2022. That brings me back to this week's big question. There are a few parts to the answer. The first thing I have to consider is the unprecedented supply-demand environment in the housing market combined with a surge in incomes. Not to mention the chain reaction of people being able to sell their homes for much higher values who then can spend more on their next home. Housing economists will be sorting these variables out for years. But the point is that there's much more to home prices than rates. And even so, you can see a few instances of big unexpected rate spikes resulting in slower home price growth. The chart also provides two clues as to why home price growth was able to accelerate in January. The first clue is the lag time between mortgage rate spikes and the potential impact on prices. It has taken between 4 and 7 months to make it into the data in the past. The second clue is that the major home price indices are fairly backward looking in that we just got January's numbers on March 29th. No one knows, actually. And the previous chart says nothing about home prices declining. The chart is the rate of change in the prices. If the blue and orange lines are above zero, prices are rising. Here's what some of the data looks like if I use the actual home price indices. In other words, prices have done nothing but move up for more than a decade, regardless of rate volatility. Could that change in the future? Sure, but also it might not. The only thing most experts agree on is that the 18 to 20% year-over-year gains will be subsiding. Yes, ask anyone who owned real estate during the major financial crisis. But that was actually the only major instance of falling property values in 40 plus years, and it had nothing to do with rates. The recent rate spike will almost certainly contribute to a slower pace of home price growth, but it remains to be seen if prices will actually decline. One thought-provoking question for those of you who were tuned into the property market during the financial crisis is this. If you told the average buyer in 2005 through 2007 and 2020 through 2022 that their home would lose 20% of its value over the next few years, who would care more? This isn't to say that home prices are invincible, simply that the market dynamics and underlying loan program availability are quite different now compared to the actual financial crisis. Now, this Wednesday brings the release of the minutes from the most recent Fed meeting, with the Fed's policy outlook being one of the key reasons for the abrupt nature of the 2022's rate spike. Markets are curious to see if the minutes will offer any new insight to the Fed's potential course of action. In addition, trading is often more volatile during the first few days of a new quarter. As such, by the end of the week, I should have a much better idea of whether rates are indeed serious about leveling off. So there you have this week's mortgage market at a glance. If you'd like to know more, reach out to me. I'd like to meet you, and that is for sure. Thanks for watching, and if you're looking to purchase or refinance a home in Arizona, I'd like to be your broker of choice. Until next time, take care and stay safe.